Hey, good afternoon, everyone. This is Joe Bacella here at Chaikin Analytics, and I'd like to welcome you to our presentation of the Ultimate Stock Checklist and Best Small Cap Stocks to Buy Today. Presenting today is Mark Chaikin, founder and CEO of Chaikin Analytics. Now, throughout our presentation, please submit your questions using the Zoom Q&A window, which you can access in the upper left-hand corner of your screen. This webinar is being recorded, and a copy will be sent to everyone who has registered. Now, before we get started, we'd like to welcome Ed D'Agostino to the webinar. Ed is known for being the publisher of Malden Economics, as well as a consultant to the financial sector. Ed joined John Malden in 2012 to build a strong editorial research and analytical team. Now, to get us started, here's Ed D'Agostino.
Hey, thanks, Joe. And thank you, everyone, for joining us today. Your support of everything that we do at Malden Economics is always truly appreciated. It's ironic, Joe. I was just wrapping up about an hour ago. We had our weekly analyst call with the entire team, editors, and our full team of analysts. We have it every week. And so it's very fresh in my mind just how integral the Chaikin Analytics tools have become to our analysis process. I mean, once we get the macro picture dialed in for each of our various research services, we then start to leverage the Chaikin system, and our work has gotten, I would say, considerably better since we started working with your team about 2 years ago. So with that, I am very pleased and happy to be introducing Mark Chaikin to everyone today. Mark has been great to work with over the last couple of years. We've had our analysts come up with some different ideas, and lo and behold, a few months later, you see things appear, new features that cater to our needs and then go above and beyond. And I think that's probably a good way to describe Mark and his team. They go above and beyond. So I appreciate all the help that you've given us and our analyst team. I'm looking forward to hearing what you've got for us today. So Mark Chaikin, take it away.
Ed, thank you very much and welcome everybody. We do indeed have a very educational webinar today with a special offer at the end. And today's webinar is about my personal stock checklist and how to find the best small cap stocks today. The reason we're zeroing in on small caps is twofold. A, small caps are starting to break out, and B, just 2 months ago, New York Life Insurance, which has licensed 3 NASDAQ Chaikin indexes for the purposes of creating exchange-traded funds, launched the CSML, the IQ Chaikin Small Cap ETF. This is not meant to be a recommendation to buy that ETF, it's just informational, but that sort of is behind the idea to look at the small cap sector. And by the way, nothing we talk about on this webinar should be construed as a recommendation, as we're not registered with any state or federal agency. So having gotten that out of the way, in the next hour, you're going to see me walk through my ultimate stock checklist. It starts out with finding bullish and bearish stock candidates using the Chaikin Power Gauge rating and our proprietary relative strength indicator. We'll then show you how to use Chaikin Money Flow to predict future stock price movement. That's right, predict future stock price movement. And we're going to show you a secret pattern that we've been teaching Wall Street professionals for the last 35 years based on Chaikin Money Flow. We're going to show you how we screen for bullish and bearish stocks, which is absolutely critical for this disciplined methodology that we're going to be describing and teaching you today. And we're going to show you how you can dramatically improve your timing with buy and sell signals. Finally, we're going to end with how you play good defense to avoid landmines that destroy portfolios. And along the way, we're going to address the question of what you do in a bear market. So a little bit of background on Mark Chaikin, 50 years on Wall Street. For 45 years, I've been using technical analysis, but always in conjunction with fundamental analysis. I never had that big macro view that Malden Economics does so well, but I did have access to fundamental research and earnings estimates and so forth. But I realized early on in my career, when the first bear market surfaced that I had ever experienced in 1969-70, after a 2.5-year bull market kicked off my career, that without technical analysis, in a bear market, you're basically lost, because Wall Street analysts are very slow, as we'll see in the presentation today, to reverse their opinions. So fundamental analysts put their feet in cement, and we're going to teach you how to avoid that. I did head up the options department at a very fine regional firm, New England firm, Tucker Anthony and R.L. Day. So I've watched tens of thousands of options traders over a 5-year period. And I can tell you that 95% of them lost money. So if you're an options trader, we're going to show you what Chaikin can do to help you reverse those odds. Along the way, I've been mentored by some of the smartest and most successful institutional investors. Some of them were colleagues at firms like Tucker Anthony and Drexel Burnham. Others were clients when we formed an institutional brokerage firm in 1989 that we were fortunate enough to sell to Reuters 3 years later. Based on everything I learned, in 2010, I created the Chaikin Power Gauge rating. It's really the culmination of my life's work. I came out of a 10-year retirement after the financial collapse of 2008 because I wanted to give something back. So my wife and I started Chaikin Analytics, and we're now 28 people in Philadelphia dedicated to our clients and to partners like Ed D'Agostino and John Malden at Malden Economics. Now, I'd like to start off with a question. Are you thinking about a bear market? And I know Joe's got a poll he's going to put up right here. So what's your current view on the market? Are you bullish? Are you uncertain? Or are you bearish? Just pick one and we'll show you the poll results in about 10 seconds.
All right. Give that a few more seconds. I see a lot of people have already responded, over half the audience, which is great. And all right, we'll cap it right there. I'll show you the results right now.
So we've got 19 bullish. Wow, that's even worse than the American Association of Individual Investors poll. 49 uncertain and 32 are bearish. So we're going to address the uncertainties and the bearishness that many of you are feeling right now, but also show you how there are still opportunities left in the market. So let's start out by looking at a 1-year chart of the SPY. This is the ETF that mirrors the S&P 500 large cap index. And you can see that since the election in November, we've been pretty much straight up. In fact, we haven't had a 5% correction in the stock market in over a year. That's why so many of the pundits on CNBC and so many of our clients and clients of Malden Economics are feeling a little bit of angst, because typically you do get one correction every year of 5 to 10%. But this market has defied gravity, as you can see from this chart. But we are banging up at the upper end of both that channel, rising wedge, and our upper volatility bands. Now, along the way, Chaikin money flow has been very strong. On this rally, it's not quite as strong as we've gotten overbought. And here's our overbought oversold indicator down near the bottom of the chart. But this is still positive money flow. And money flow, which we introduced in 1982, measures institutional buying and selling. So when institutions want to get immediate equity exposure, they go to the SPY, which is the most actively traded instrument in the US markets. Has many, many, many billions of dollars in it. So it's a good measure of what both individual and, more importantly, institutional investors are thinking. So we are banging up against the lower portion of our revised target for the year. We had been at 2450 to 2500 since November. We're now talking 2450 to 2550. But we are getting up there into that space where the market could be vulnerable, especially when earnings season ends. But we're maintaining our bullishness. Now, if you're uncertain or if you are bearish, here is a very, very high probability way to profit from a short-term correction or start protecting your portfolios if we head into a bear market. this is from an options module that we license within Chaikin Analytics called Options Play. It's also been licensed by Merrill Edge, by Raymond James, by Oppenheimer, by Street.com. So it's gotten a lot of endorsement over the last year. We found them a year and a half ago and integrated it into Chaikin Analytics. And what it's doing here is it's saying if you're bearish on the SPY or the S&P 500, you could sell short 100 shares, you could buy a put, or you could put on a vertical put spread. And almost invariably, the vertical put spread has a better risk-reward ratio. In this case, if the SPY, the S&P 500, drops 2.5% between now and September 1st, you make almost 350% on that $129 investment. So you can protect a portfolio. You could profit from a short-term pullback. If you expect 5 to 10%, then you obviously want a put option with more potential. But the point is that you can use options, as many of you do, to both benefit from a correction or protect your portfolios if you're not prepared to go completely to cash. And going completely to cash is a pretty daunting thing for this reason. It's easy to sell a stock or a portfolio of stocks, but if you don't get back in at the right time, then all that downside exposure that you missed can come back to bite you. And I'm a market technician who's tried to call tops and bottoms for 45 years. It's not easy. Now, one of the problems we have is information overload. Many of you may be uncertain because of the talking heads on CNBC who've been wildly bearish all through this latest upswing. A lot of people with very well-known names like Icahn and Jones, Tudor Jones, have been bearish. Gundlach, who's an expert on bonds but hasn't gotten the stock market right for a year and a half, have been flooding the airways with bearish chatter about stocks and where they're headed. Well, that's part of the information overload problem. So as an investor or a trader, your challenge is how you stay focused in the age of distraction. That's the little conundrum at the center of this slide. Now, our solution to information overload is Chaikin Analytics, because as you'll see, we synthesize the fundamentals and the technicals into a quantitative rating and put everything together on one chart. Now, along the way, since we launched the company in 2009, Chaikin Analytics has been adopted by the pros, and we've gotten great press. So Malden Economics, as Ed told you, is a very loyal partner, but they also use the tools that we're going to be explaining to you today in their daily decision making. Rational Bear has used Chaikin to find great put trades, particularly in Avis. We've been written up in Barron's, Forbes, and won a FinTech award at Benziga that we'll talk about. And hedge funds like Paulson and Soros are using the product. So we've gotten tremendous uptake and validation both from users and from the media. And the reason is that Chaikin Analytics helps you improve your investment results by giving you a directional edge. This is what those options traders at Tucker Anthony were missing. 95% of the options traders at Tucker Anthony lost money because they didn't understand the importance of a directional edge. They were taking wild bets with out of the money call options, short time duration, instead of focusing on where a stock was headed and then taking a position that was appropriate to the move that was expected. So we give you the directional edge by combining fundamentals with technicals into a multi-factor quantitative model, and then providing buy and sell signals for disciplined, unemotional entries. And we've converted this discipline methodology into a three-step approach that my wife Sandy talks about on her webinars. She's become an extraordinary stock picker and investor and trader just by following the methodology that we're going to lay out for you in the next few minutes. But we've encapsulated it in this pyramid. At the top of the pyramid is the Chaikin Power Gauge rating. It's the very simple output of our multi-factor model. And we also think that industry group trends are very important. And it's not just us, it's Zacks, it's Investors Business Daily, it's Standard & Poor's, all published white papers over the years showing conclusively that strong stocks and strong industry groups put the wind at your back and give you the best performance, whether you're a trader or an investor. The bottom of the period, two only technical indicators. You don't need a wealth of technical indicators to be successful as an investor. Chaikin money flow, which has been around since 1982, so 35 years, and Chaikin relative strength, which we developed just for Chaikin analytics. They're right in the middle, that sweet spot, the buy and the sell signals to make timing a joy for you instead of a pain. Now, we're going to start out by showing you some concrete examples. The first one we're going to refer to as what we call a classic Chaikin bull. This is how you find stocks to be invested in on the long side or to swing trade. Very simple three-step pattern. As I said, the Chaikin power gauge rating is bullish. The stock is outperforming the market. And Chaikin money flow, which, as we said when we looked at the SPY chart, measures institutional buying and selling, is strong, indicating that the institutions are accumulating the stock. Now, before we blow up this example of AMAT, I want to show you a chart that a market technician or strategist named Richard Wyckoff developed over 90 years ago. He was the guru of his day. And he developed an idealized sort of concept of the way stocks go up and down. And this is his accumulation pattern. And as we look at the bullish examples in today's webinar, keep this in mind. We didn't create this methodology with Wyckoff in mind, but when I first started doing webinars, a thought came up and I reached for a book on the bookshelf behind my desk, because we actually started this company in our house when it was just the two of us. And I took out Stan Weinstein's book. How many on this webinar know who Stan Weinstein from the, I think it was Professional Investor, is? If you do, type a big S into the question box, please. And Joe, let me know if anybody remembers Stan Weinstein.
All right, let's see. Keeping an eye on the Q&A window here. And as it typically happens, all the S's are coming in at once. So it looks like there's a pretty strong response between the word yes and the letter S.
Well, I'm pleased to hear that, because if you've read Stan Weinstein's book, then you're one step ahead of the game in terms of combining fundamentals with technicals. Stan Weinstein wrote a market letter in the late 60s and 70s. I think he's probably retired now. And he wrote a book on investing. And in that book, he had a cyclical chart, and he also had this Wyckoff chart. He had the 4 stages of a bull and bear market. He just broke Wyckoff. He combined Wyckoff's bearish and bullish charts. So with that in mind, I pulled out the book and I said, oh my gosh, all the examples I'm talking about in tomorrow's webinar, and this goes back 3.5 years ago, look like a Wyckoff idealized accumulation and distribution chart. So let's look at Applied Materials, AMAT. It's one of the semiconductor equipment manufacturers that's been leading the tech sector. And at the bottom of this 1-year chart is the Chaikin power gauge rating. It's a ribbon that goes from red to yellow to green. Notice there's no red on the chart. Occasional periods when it's gone neutral. But that's your directional edge. That's the 20-factor quantitative model, the multi-factor model working for you, doing the heavy lifting by analyzing the fundamentals in an objective way. Right above that, Chaikin relative strength. Now you could get the relative strength from Investors Business Daily. William O'Neill does a great job, but it's a number from 1 to 99. What do numbers do? If you've got to remember them, they contribute to information overload. So we've converted relative strength into a red-green heat map, and we're going to show you a special pattern about that that's so important to preserving capital in a bear market and actually profiting on the downside. And then Chaikin money flow, which in this case shows you mountains of green. And what does that tell you? It tells us that institutional investors were accumulating AMAT in droves in 2016 into 2017. And then we show you those buy and sell signals In this case, we're showing you our oversold buy. This is such a simple pattern. I owe it to Larry Williams, who's sort of a long-distance mentor of mine. I created Chaikin Money Flow on the shoulders of Larry Williams' groundbreaking work in accumulation and distribution, and also Joe Granville. So always good to pay homage to your mentors. But Larry Williams created a concept that's so simple. If you like a stock, he said, wait for it to make an 8-day low as it gets oversold. Now, in our case, we filter these signals with the Chaikin Power Gauge rating. So we only get oversold buy signals on stocks with a bullish Power Gauge rating. That's our way of defining that we like the stock. And these signals work about 2/3 of the time. They're more for traders than for investors because their time horizon is 5 to 10 days. When we look at the bearish chart coming up, we're going to show you a signal that has a time duration of 4 to 8 weeks, which makes it ideal for swing trading and options trading where you can stay longer. But look at this chart. Everything you need to know, including the next earnings date, August 17th, an option strategy you can pull up just by clicking on options, as well as our color-coded earnings icons. So for the 4 quarters that are on this chart, AMAT has its EPS icon colored green, meaning they've reported a positive earnings surprise. And up here, it's expected that when they report on Thursday, August 17th, they're going to report another positive earnings surprise. So in spite of a big pullback here, when tech stocks took it on the chin in June, AMAT's banging up against new highs. So that's your classic Chaikin bull. But the question always comes up, how do we find them? Well, we find them using our built-in screener. And in this case, for a webinar I did 2 weeks ago, I started with the Russell 3000, look for stocks with a very bullish rating that had a history of positive earnings surprises, because as you'll see, earnings surprise is absolutely critical to the future path of a stock's price. And then I looked at our 2 proprietary technicals, Chaikin Money Flow and Relative Strength. And by doing that and looking at only large and mid-cap stocks, we were able to screen that 3,000 stock universe down to just 17 names. And many of those are stocks we're going to look at in today's webinar, including Anthem, KB Homes, WellCare Health Group. It's easy to find the winners if you have a disciplined methodology. Now let's look at classic Chaikin bears. So if you're uncertain about the market, or if you're in that category of bears, I think it was 22%, you have to know this pattern. The power gauge is bearish, meaning the fundamentals are working against the company. On a relative basis, they rank poorly compared to the other 3,000 stocks in the Russell. It's underperforming the market. That's the most telling condition. We'll explain why in a minute. And Chaikin Money Flow is red, not green, indicating that institutions are selling the stock. Now, for the last 7 months, we've been using Under Armour as our poster child for the classic Chaikin bear. Prior to that, it had been Chipotle. Prior to that, Kinder Morgan. Before that, Wynn Resorts. Because in every 12-month period, it's so easy to identify those stocks. You can find the stocks that are likely to go down, and you want to avoid them at all costs. So what's the pattern here? At the bottom, now you see your directional edge being bearish because the power gauge ribbon is primarily red. That started in late August of 2016. Right above that, relative strength. Stock is underperforming the market. We say the market agrees with the model. No matter how good your fundamental research is, and I think Ed D'Agostino appreciates that as well as anybody I've ever met, if the market doesn't agree with you, the market always wins.
It's a hard lesson to learn.
Yep, and my old friend Marty Zweig, who sadly passed on way too soon and whose partner is now joined me in Chaikin Analytics as the head of our money management subsidiary, worked side by side with Marty for 22 years running the Zweig mutual funds. And he said Marty was religious about that. The market always wins. So Marty Zweig actually gave us the prescription to have made money over the last 8 years. What did he say? He said, watch the Fed and listen to the market. And if you just do that alone, you can throw out all the gurus and all the Mark Chaikins of the world, and still make money. But the real ironic thing here, once we look at the institutions who were just selling the pants off, no pun intended, Under Armour, back here in October, November, December, is that today CNBC announced that Deutsche Bank had downgraded Under Armour to a sell. The Chaikin power gauge turned bearish at 40. It was underperforming the market. It went all the way down to 18, and now Deutsche Bank is throwing in the towel. That's why you need independent thinkers like Malden Economics and the kinds of tools that we're providing you at Chaikin Analytics, because you cannot depend on Wall Street research. It's late. They act like sheep. They follow one another into the abyss. You need independent voices and tools to make yourself self-sufficient, but they've got to be the right tools and the right voices. So Under Armour may be making a bottom here. The fact that Deutsche Bank downgraded it to a sell actually encourages me to think that maybe the worst is over. But imagine downgrading a stock that's dropped over 60% to a sell signal. So what is the Chaikin power gauge rating? It's a very simple display, but it's extremely reliable. What I've said more than once on these webinars is the Chaikin power gauge rating is like a Chevrolet with a Ferrari engine under the hood. There's an awful lot going on. My wife Sandy usually shows an iceberg at this point. There's a lot going on under the surface. We're crunching a lot of numbers. And it can be your GPS during market corrections. It can point you to stocks that you might want to buy, taking advantage of that 5 to 10% correction that comes on average every year. And it can certainly tell you which stocks to avoid. So what is the power gauge rating made up of? Well, we have 4 primary factors: financials, earnings, technicals, and expert opinions. And within each of those, we have 5 sub-factors. All the weights are different for both the primary factors and the individual sub-factors. But the key thing to note is that the model was locked down in September of 2010, almost 7 years ago. The factors are the same, the weights are the same, and the model has performed admirably since January of 2011, when we introduced it in our first commercially available product, Research Reports on 5,000 Stocks, updated nightly. Now, I've boxed in red 2 factors. Industry group strength, we've also already talked about. We're going to see examples of that when we look at some bullish and bearish industry groups and how they played out over the last 3 or 4 months. But the key thing to realize here is how important earnings surprise is. One of my mentors was a gentleman named George Douglas, who built a big quantitative database at Drexel Burnham in the mid-'80s. There were 2 on Wall Street only, believe it or not, Morgan Stanley and Drexel Burnham. And George gave me access to the database, but more importantly, he mentored me, because George did the original research on earnings surprise and earnings estimate revision. And what George taught me has stayed with me for 30 years. Earnings surprises come in bunches. There's never just one of them. And a positive or a negative earnings surprise causes Wall Street analysts to raise or lower their earnings estimates. And he documented in a white paper that earnings estimate revisions are the single biggest short-term driver of stock price movements. So if you're wondering why the Chaikin power gauge rating has been adopted by so many successful investors and is now the basis for an index on which an ETF has been launched, it's because the financial metrics are 35% of the model. They're sort of the bedrock of the pyramid. And this is what successful value investors like Warren Buffett and Seth Klarman, who many of you may not know, but who became famous when his horse won the Preakness back in May. Value investors look at these, goes all the way back to Graham and Dodd. But we've combined those value metrics, which don't change very often, with some shorter term, more sensitive indicators. One of which, in addition to earnings surprise, is insider activity. It's one of the 20 factors in the model. But we only look at insider buying. And particularly when we look at small cap stocks, think about what's really happening. In a small cap stock, the insiders typically own a larger percentage of the company than normal, certainly than in the case of the large caps like ExxonMobil or IBM, where the insiders own very little. So if an insider takes out his wallet, particularly in small caps, but across the board, writes a check and buys more of his own stock, what is he telling us? He's saying that I've got a 12 to 18 month window where I see good things happening for my company, because typically insiders have to hold for 12 months. Otherwise, they've got some splaining to do to the SEC, as Desi Arnaz used to say to Lucy, got some splaining to do. So insiders have a window that nobody else has into their own company. They're not right 100% of the time, but they're going to be better than any Wall Street analyst and certainly better than you and me. So if we monitor what insider buying is happening in a given stock, that's a very important input. And that's why this model is so powerful. The power gauge rating works because it's based on how Wall Street works. These factors are what successful institutional investors look at every day when they make their investment decisions. But they don't all look at each of these factors, because institutional investors, as I learned when we had a brokerage firm that catered to them, have different styles and different time horizons. This model reflects all of that. It's a robust model that works because it's based on how Wall Street works. And this quote from James O'Shaughnessy, who's written 2 books on quantitative investing and the factors that drive stock prices, I think sums it up. Models beat humans. Models beat human forecasters because they reliably and consistently apply the same criteria time after time, as opposed to human beings who are swayed by emotions and opinions. Does that resonate with you? Do you realize how often as traders or investors we get swayed by the emotions, either our own emotions or the emotions on the big screen that we watch, CNBC or Fox Business, or the headlines in the Wall Street Journal and so forth. So models beat humans. That's the crux of what we do at Chaikin Analytics. When people ask me what my opinion is about a given stock, Chipotle or Tesla, I say, I don't have an opinion. I can tell you what our model is saying. And that's really critical. You start projecting your own subjective thinking and you've destroyed the whole rules-based methodology. So let's look at the performance of the power gauge ratings. First in 2016, using the Russell 3000 as our core universe. The average very bullish stock up 32% in 2016. And I know a lot of you are saying, boy, I wish my account was up 32% last year. And realize that we don't pick off the tails of the distribution curve like many model builders do. Each of these silos is equally populated. And the very bearish stocks were up only 9.5%. So I always ask the question, would you rather be in those stocks that were up 9.5%, in essence, bottom fishing in energy and small caps, or would you rather be in those stocks that were leading the market, the healthcare and the tech stocks, up 32%? 2015 makes it very clear why you need a discipline like the Chaikin power gauge ratings in a bear market, because in 2015, the Russell 2000, the lowest 2000 market cap stocks in the 3000, was in a bear market. Small cap stocks were down over 28% at one point in 2016 and 15. Energy stocks, fracking stocks, Range Resources, Kinder Morgan, Pioneer, the rails, small caps in general. So the average very bearish stock in 2015 down over 17%. The average very bullish stock was flat. This was a year in which the FANG stocks dominated, as they are once again. So it's very important to know which stocks have bearish fundamentals, and the power gauge rating does an excellent job of telling you that. Now, one final piece of validation, and then we're going to get into some really heavy examples that you can take away and use for the next 10 years. Chaikin Analytics has partnered with 2 very large financial organizations. With NASDAQ, 3.5 years ago, we created 3 NASDAQ Chaikin indexes: large cap, small cap, and dividend achiever. And it was a daunting task because NASDAQ said, we rebalance our indexes once a year. And therefore, the indexes that you create using the Chaikin methodology, the same methodology we're looking at today, can only be rebalanced once a year. So these are buy and hold portfolios. And I know many of the Malden Economics subscribers who are on the webinar are long-term investors. Although some of you have indicated, because we have over 400 Malden Economics subscribers who are Chaikin subscribers, some of you do trade, swing traders using options occasionally. But longer-term investors, buy and hold investors, should be encouraged by the fact that the NASDAQ Chaikin indices, which are rebalanced or reconstituted once a year based on a rules-based methodology, have significantly outperformed their benchmark. The small cap index, a NASDAQ Chaikin small cap index, outperformed the Russell 2000 by 2,200 basis points. Now, what does that mean? The Russell 2000 from April 1st of 14 through March 31st of 17 was up 22%. And the NASDAQ Chaikin index, on which this ETF is based, was up 44%, double the performance, just using a rules-based approach with the power gauge rating as the final arbiter. And because of that, New York Life's Index IQ and Mainstay subsidiaries licensed the 3 NASDAQ Chaikin indexes in February, registered them with the SEC to be the basis of 3 exchange-traded funds. And as I said, the small cap was launched 2 months ago. And by the way, it made a new high today. Again, not meant to get you to buy it. Definitely not. Just pointing out that it validates the Chaikin power gauge rating. So let's look at 3 patterns. Excuse me one moment. That embody everything we've talked about up to now. The first one is called the dynamic duo. It's the combination of the Chaikin power gauge rating and relative strength. This is Marty Zweig incarnate. He was a disciplined quantitative model builder and he watched the market. So the dynamic duo helps you find big winners and losers. And superior returns come from stocks that outperform the market or underperform the market. But there's one caveat, which is why it's in red. Relative strength stands alone as a bullish or a bearish indicator. What do we call that? We call that momentum. And there are times when momentum stocks defy the laws of gravity. I'm going to show you a classic example of that in a moment using Chipotle, because if you buy a stock solely on the basis of price momentum, where the fundamentals do not support it, like Tesla right now or Chipotle, you're on a high wire without a safety net. And when something goes wrong, and we'll see what went wrong in Chipotle and how Chaikin could have given you advance notice, the fall off that high wire is very painful. It's painful emotionally and it's painful financially. So the dynamic duo is very important. And here are 2 examples. WellCare Health, WCG, bullish power gauge rating, outperforming the market. So the market is agreeing with the model. There's your classic dynamic duo on the upside. With all the Sturm and Drang in Washington about repeal and replace, the healthcare stocks have been making new highs. And here's a classic example of that. Now, on the downside, TripAdvisor is a good example. In the sort of internet travel and leisure field, has had a bearish power gauge rating for over a year, has been underperforming the market. You've got some sell signals there. It's a stock that's making new 52-week lows when the market's making new 52-week highs. So when the dynamic duo is working on the downside, where do you want to be? You want to be out of the stock and looking for opportunities if you're a trader to buy put options or go short. Now let's go back in time 2 years and take a look at Yelp, because Yelp is in a very similar space, industry group to TripAdvisor. And the charts are almost identical, except this chart ends in 2015. And where that red arrow exists, in my weekly market letter called Market Insights, I made Yelp my bearish stock of the week because they were due to report earnings and the stock had just gotten overbought. When they reported earnings, the stock dropped from 35 all the way down to 20 over a 2-week period. And we got this testimonial from Mike T almost 2 years ago. Netted $17,408 in profit this morning. I found more success in the past 2 weeks using Chaikin than I've had the rest of the year. I had the biggest winner of the year today on Yelp based on Mark's bearish play of the week. Risked 7,000, made 17. And Mike actually gave us his trading blotter. I think this is probably from Interactive Brokers. And he's clearly a sophisticated options trader. He had 3 different positions. He knew what he was looking for. This was before we had integrated options play into Chaikin. Now you can be as successful as Mike, because if you have an opinion on a stock, power gauge rating guides you, and options play gives you probability-based options recommendations. Now the second pattern, and this is really the key to making and keeping profits in the bear market, is spotting personality changes. Now, what is a personality change? It's a stock that's been outperforming the market, so our relative strength indicator is green, that begins underperforming the market. That's a bearish personality change. And then the reverse is true. If a stock has been underperforming the market and starts outperforming, we call that a bullish personality change. Now, why is this important? It's important because too often in Wall Street, as investors or traders, we put our feet in cement. We fall in love with a stock, or we love to hate a stock. So I love to hate Tesla, but I'm smart enough to know that when momentum traders are driving the wagon, that Tesla is going to go up. But I have a negative bias against Tesla. You shouldn't have that. So I rely on the power gauge and the technicals. But if you put your feet in cement, you're bound to lose, because the market rules. So let's look at 2 examples. Here's Anthem Health. It had been underperforming the market prior to the presidential election, concerned about a Hillary Clinton victory and what that might mean for the healthcare stocks. Anthem's one of the largest providers of Blue Cross Blue Shield coverage in America. And right after the election, the stock broke through this basing pattern. Remember that Wyckoff bullish pattern? There's your accumulation phase, your base. The power gauge had already turned bullish. And now the stock started outperforming the market. There was your bullish personality change. Look up to the money flow, and you see the institutions kept buying the stock all the way up. It moved from about 132 all the way to 195. And it's still within breathing distance of its new all-time high. So that's the example of a bullish personality change. If you had stayed negative on Anthem, you missed out on a big move. And if you're unfortunate enough to be short, then obviously you were on the wrong side of that trade. Now, on the downside, we're looking at Hertz Global, the rent-a-car company. The power gauge turned bearish in October. There was institutional selling. The stock was trading at about 35. Then you got a negative earnings surprise. Notice there have been 2 others subsequently to that. That's George Douglas's teaching me that earnings surprises come in bunches. So the stock spiked down, and at that point, you had a bearish personality change. And even though that came at 25, there was still plenty of opportunity to get hurt on the downside, because the stock bottomed out at $8 or $9. So I have a theory that it's never too late to sell a stock where everything's lined up against it. And Hertz is the classic example of that. Under Armour, Kinder Morgan, back in 2015-16, both good examples of that. Now, I mentioned earlier that the Rational Bear used Chaikin Analytics to find a very, very profitable put trade in Avis. Shows you the group trends that we were talking about, and we're going to look at more of that in the auto parts business in just a minute. So one final example of a personality change. This is in SunEdison, which was a darling of the solar energy industry. The hedge funds loved it. I think it was Einhorn who owned a big position. Merrill Lynch was recommending it up here at 28 to 30. power gauge turned bearish in July of 2016 with the stock at about 28, and then it started underperforming the market. Notice that the institutions were already selling the stock. And along the way, there were some sell signals at $10 and then again at $8. And Merrill Lynch actually threw in the towel and put out a sell recommendation at $3 in February of 2016, having recommended it in the high 20s. In retrospect, that's okay because, as you see on the screen, SunEdison filed for bankruptcy. This is an example of how Chaikin can help you avoid stocks that are in their own bear markets. This all happened in the context of a bull market. These are stocks you need to avoid. And we got this testimonial after presenting at a conference, options conference in California in May of 16. Attendee at the conference who turned out to be a financial advisor at Merrill Lynch walked by just as I was using SunEdison as an example of how Chaikin can help you. And he said, whoa, 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 can I take a look at that chart one more time? And he said, I bought SunEdison at 15, which my firm Merrill Lynch was still recommending it. If I had been using Chaikin, I could have saved my clients and myself a lot of pain and money because he averaged down on Sun at 15. So you got to avoid these stocks and avoid averaging down, avoid bottom fishing and so forth. The third pattern that I want to share with you is what we call the secret trade that 95% of Wall Street traders never see. We call it a bearish money flow alert. It's based on Chaikin money flow. We've been teaching it to successful institutional traders and investors for over 35 years. Before we show you that, I'll show you the bullish mirror image of that. We call it persistent accumulation. So here's KB Homes, which showed up on that screen that we showed you earlier. And right in here, where you see the yellow arrow, we actually put out a buy recommendation on the stock because it showed up, as you'll see in a minute, on our alert screen. But notice that in every sideways period or sell-off, Chaikin money flow stayed green. Normally it fluctuates from red to green as it did here in November through January of 2017. But this is persistent accumulation on a stock with a bullish power gauge rating that's outperforming the market. So you want to buy the dips, you want to buy the oversolds. As long as money flow stays green, there's persistent institutional buying. You can follow the signals. Now, here's that powerful signal that very few people see. We call it a bearish money flow sell alert. It's triggered when a stock makes a new high or equals an old high near that upper volatility band. And money flow, which should have gone green, stays red. What does that tell you? It tells you that institutions are selling the stock under the cover of price strength. Who are they selling it to? Could be the public, could be people who are responding to a rumor or an earnings event. It doesn't matter. What matters is that there's more buying, there's more sellers than buyers. That's what Chaikin money flow measures looking back over 21 days. So you could have gotten out of Advanced Auto Parts. Again, another stock where relative strength was strong, but the fundamentals didn't support it. The power gauge was neutral. It was actually bearish, but we have a technical overlay to avoid getting bearish in stocks that are picking up momentum. But once things started to break down, you got a bearish personality change. Look at the institutional selling that went on from 170 all the way down to 140. And then ahead of the last earnings report, the stock rallied. We got an overbought sell signal. That's a new 8-day high under our long-term trend line. And we actually alerted people in our weekly market letter of April 9th to this pattern. Stock reported a negative earnings surprise, gap down from 150 all the way to 128, and it's continued down to 100. So this is what this money flow alert can do. It can help you get out of a stock near its high. I don't know of any other indicator that can do that. And if you try and do it, routinely you're going to leave a lot on the table, but with this pattern, you're not. And it also points you to the bearish potential in that stock. So what we've been talking about with these three technical indicators, Chaikin money flow, relative strength, the signals, and our fundamental indicator, the Chaikin power gauge, is what Warren Buffett calls the ideal setup. He has famously said, and I owe this to my partner and director, Christopher Castroviejo, that they don't call balls and strikes on Wall Street. So you don't have to swing at every pitch. You can wait for your pitch. Warren Buffett calls it the fat pitch. I call it the ideal setup. So we've been talking about that ideal setup throughout the webinar. And one of the key components of the trigger to buy or sell a stock is to have a reliable, proven signal to get in or out of the stock. So we have 6 pairs of buy and sell signals, and you've seen examples of 3 of them. But again, as with the screener, which helps you find bullish and bearish candidates, you have to be able to find them. So we have a dashboard alert in Chaikin Analytics, and I've got a slide here that comes from a webinar I did on February 9th. And in a list of stocks that I follow, KB Homes at 16 triggered an oversold buy signal. We saw on the previous chart that it went to 24. And Darden Restaurants triggered a reversal buy at 73.5. And let's see how that worked out. There's where that signal triggered. The stock was 73.5 on its way to 95. And it's now sort of given up. But the key here is that to trade more profitably, you should follow the signals. And if you're an investor or an intermediate term investor, these are great entry points. Because any disciplined entry point that's based on proven analytics, A, it gives you conviction, and B, it's better than trading on your emotions. And if there's one message I want to take away and hand you on this webinar, it's emotions do not help you. They hurt you in the stock market. Now let's go back in time again and look at a dashboard from January 28th of 16. Amazon, which was at 583 and ultimately, as we know, peaked at 1,000, gave a money flow sell alert just before a webinar I gave on 128. Had a bearish power gauge rating. It actually triggered that bearish money flow sell alert. There it is. New high-end price near the upper band, and money flow stays red. It did the same thing back here as well and triggered over a 100-point decline. This pattern has worked over and over again for 35 years. But we zeroed in on this sell signal right before earnings were due out back in January of 16. And recommended buying puts on Amazon ahead of the then Thursday earnings report, and that was in our weekly market insights of January 23rd, 2016. And here's what happened. Amazon missed. The company dropped 73 points and ultimately bottomed out below 500 at about 480. So it dropped from that sell signal from 600 down to 480. Now, to emphasize, why am we talking about these historic examples? Because just like the Wyckoff charts have held up for over 90 years, the Chaikin methodology is not a fly-by-night, newly created set of indicators. And very often you find people who constantly revise their indicators. This has been working for our clients for 5 years, and it's based on patterns that have worked for 90 years. I want you to come away from this webinar with the confidence that there really is an objective way to analyze stocks that takes the emotions out and puts the odds on your side. So following that recommendation, we got this testimonial from Harry S., who said, "I'm up over $17,000 in 2 weeks. You changed my life. Just by my options trades on Google, Amazon, and Priceline. It's all from checking the Chaikin power gauge ratings. Chaikin Analytics is a godsend." So Chaikin Analytics has been working for our clients to help them make better informed trading and investment decisions for over 4 years. Now let's get to the small cap section of the webinar. How do you find small cap winners? Well, in my market insights of April 16th, I highlighted two bullish small cap stocks in the semiconductor space, Acellus and Integris, and made them my bullish stocks of the week. Here's what happened to Acellus. It went from 18, having just triggered an oversold buy signal, all the way to 26. So one final example of a small cap stock, again in the semiconductor space, that we recommended on June 9th in our weekly market letter. Applied Optoelectronics, we said to buy it at 60 on a little bit further pullback. It's trading at 96. Quite honestly, a week ago I said at 84. I'm happy with a 40% gain in a month, so take some money off the table. So again, the question comes up, how do you find small cap winners? I found these stocks using my screener. Started with the Russell 3000, look for very bullish stocks, strong earnings surprise again, above a 21-day average. And in this case, instead of large and mid, I was looking for small cap. I did the screen today. And here are some of the same names we've been looking at, Acellus, MDC, and also Alamo Group, which we made our bullish stock of the week just this Sunday, was up 3.5% today, up about 4.5% since we recommended it on Sunday. So you can find the small cap winners with a disciplined approach. There are screeners on the internet. We've got a screener built into Chaikin Analytics, which enables you to screen on the model and the factors. Now let's talk about good defense, because that's how you protect yourself in both bull and bear markets. It starts with playing good defense. Herb Greenberg, who's back on CNBC, wrote a column for Street.com 2 years ago that said it's the stocks you don't own that matter. So part of playing good defense is reducing risk by avoiding mistakes, by avoiding stocks in weak industry groups, as we'll see in a moment, by knowing what stocks not to buy, by improving performance, by eliminating potential losers from your portfolio, and then ultimately using put options to protect your portfolio. So the question comes up, how do I make money in a bear market? And in fact, JP, who's a Malden Economics subscriber who's on this webinar, sent me an email yesterday. He said, what do you recommend doing in a bear market? Should we sit on our hands and gut it out or become proactive? And I immediately responded to JP and said, gutting it out doesn't work. You've got to be proactive. We don't make specific stock recommendations to individuals, but general advice like that we can do. You do not gut it out, because you don't know how low is low. So you always want to have some cash on the sidelines. Jim Cramer talked about that on his show 2 nights ago. You want to be aware of when the market is vulnerable and start taking some profits, but you do not gut it out. The psychological pain is just too big. So here's the Wyckoff chart in reverse. This is Wyckoff's idealized distribution pattern. This is how stocks look in a bear market. Now, Chaikin can help you make money in a bear market. I know that John Malden and the Malden Economics team are turning increasingly cautious on the market, if not somewhat bearish. And that's based on their macro view and concerns about some of the uncertainties around the world, and particularly here in the US. So if you're in that camp, although we're maintaining our bullishness for now, that could change. You've got to look for ways to protect yourself and make money on the downside. So, Joe, I think you've got a poll up, and I want to ask the question of whether you've used put options or sold short to profit in a correction or a bear market. Have you used either or both of them, or neither? So please take a minute to check the poll, and we'll give you the results in a moment.
Let's see. So I know a lot of responses coming through already. Thank you all very much for participating. Looks like there seems to be a pretty big leader, but we'll show you the results in about 10 seconds. All right, all right. All right, I think that we just about topped out. All right, let's show you the results.
So 53% have not used either puts or short sales. Only 23% used put options, 10% short sales, 14% both. You really have to consider this for a bear market. You can go to cash, that's okay, but there are opportunities you're missing on the short side. Services like Rational Bear, Chaikin Analytics can help you find profitable opportunities on the short side. And that's not just in a bear market, because what we're looking at here is the Select Spider Energy ETF, the XLE, which represents all of the large cap energy stocks in the S&P 500. It peaked in August of 2014 at 100, and by the time it finished in 2016, it was down to 50. Declined 50%, that's a bear market. And that happened in the context of a bull market in stocks. Notice the bearish personality change right at the beginning of that move. So the relative strength indicator in Chaikin alerted you to that. Now, we are going to have a power gauge rating for ETFs within the next couple of months. That'll just enhance the capabilities, but relative price performance on an ETF is wonderful. Now, as XLE was going down 50%, Kinder Morgan was actually rallying. And that peaked in early 15, whereas the XLE peaked in August of 14. But when it peaked, it really peaked because the stock dropped over 75% from 43 all the way down to 10. So that's what can happen in a bear market because energy was in its own bear market. Now let's zero in on Kinder Morgan back in 2016. The power gauge turned bearish at $40. You had a bearish personality change, so the market was agreeing with the model. The institutions were selling it, and along the way you had these overbought sell signals as the stock was dropping from 40 all the way down to an ultimate low at about $12. It subsequently rallied with some hedge funds buying it and Warren Buffett establishing a position. The bottom line is you could have avoided the pain in Kinder Morgan, and many people were attracted to it by the 20% dividend, which they ultimately cut. Now they're talking about raising the dividend again in 2018 and 19. They just did raise it in 17. But the key is you can make money on the downside even in a bull market. Imagine what happens in a bear market. Can you picture how these indicators could help you not only sidestep disasters and landmines, but actually make money in a bear market? Because if you're making money on the downside, what are you not doing? You're not looking to bottom fish. You're thrilled that the market's going down. If you're sitting in some cash and you're also trading to the downside, you're going to keep that cash dry, keep your powder dry. Really important. So what's energy doing today? Well, we had a bearish personality change in the XLE back in January. And since then, the XLE has dropped from 72.50 all the way to 62.50. So it's dropped 10 points or 15% in a market that's been making new all-time highs. So energy has been in a mini bear market, which means you want to look for opportunities to get out of stocks like Schlumberger or buy put options when there's a sell signal right ahead of an earnings report. And there have been a series of earnings reports and sell signals. You had one just last Friday. The stock rallied on some short covering and then was back down again. So opportunities abound on the short side, even in a bull market. So let's end the webinar by looking at earnings season where options can make you an awful lot of money and where you can sidestep disasters. So back on April 9th, in our weekly market insights, the week before we recommended the semiconductor stocks on the long side, we identified the auto parts group as a weak industry group using tools that are built into Chaikin Analytics. So we said there are 3 auto parts retailers we should consider selling on strength: Advanced Auto Parts, AutoZone, and O'Reilly. The reason we said sell on strength is because they were making new 52-week lows. But they did rally, and then they started reporting earnings, and the earnings were disappointing, and this is what happened. Advanced Auto Parts, which we saw that bearish money flow sell alert on at 170, dropped from 150 to 100, where it's now stabilized. But again, as with everything, you have to know how to find these. And in our weekly market insights, we have upcoming earnings reports, and we separate them by bullish and bearish, and we show you which days they're due to report. And then on the app itself, we tell you whether they're going to report before the opening or after the close. So on a webinar we were doing on 4/24, we highlighted O'Reilly and Helmerich and Payne, both with bearish ratings. And then a month later, we highlighted Advanced Auto Parts with a bearish rating and Best Buy with a bullish rating. So let's see what happened. O'Reilly rallied off that recommendation to sell on strength, peaked right before the earnings report, and then proceeded to go from 265 all the way down to 170. Now, 2 weeks ago, 2.5 weeks ago, the stock dropped over 50 points in one day. Why did it drop? Because earnings aren't due out until tomorrow after the close. It dropped because they announced same-store sales for June, and they were down 4% year over year. Now, you can't meet an analyst 12% earnings increase projection if you've got year-to-year sales down 4%, same-store sales. So the stock, anticipating a negative earnings report on the 26th, which is tomorrow after the close, proceeded to drop an additional 50 points. If you had followed the sell signals, you would have been out of it. You would have been on the short side. Helmerich and Payne, same industry group as Schlumberger. We had a sell signal, came about 2 weeks ahead of the earnings report, negative earnings surprise, bearish power gauge, underperforming the market, negative money flow. This is that ideal setup. The stock dropped from 68 all the way down to 50. So again, 18-point drop, almost 30% in a market that was making new 52-week highs. And then, of course, Advanced Auto Parts, which we saw earlier, bearish personality change, and the sell signal ahead of the earnings report. If you're using options, you get the benefit of leverage and predefined risk. So options, typically a bearish put spread, more so than a outright put option. The high probability risk reward trade ahead of earnings reports when the power gauge is bearish and you've gotten a sell signal. Very powerful combination. And we got this testimonial a couple of years ago, 10x return in 5 days. In the 5 business days that I've been using Chaikin Analytics, paid for the subscription tenfold, thanks to the whole Chaikin team. And this really is a team effort. So here's today's disaster du jour. Seagate, which had a bearish power gauge rating, it's been off and on bearish or neutral, but we had that bearish personality change, gave a sell signal about 8 days ago. The stock rallied a bit into the earnings report, which very often happens. It's one of the ironies of Wall Street. Either it's short covering or wishful thinking, but stocks with a bearish rating very often rally into earnings, giving you a chance to buy a put option very cheaply. And in this case, Seagate disappointed. And as you see on our intraday chart, it gapped down on the opening on heavy volume. It actually gapped down 20%. That turned out to be the low of the day, or within 5 minutes of it, and then the stock rallied, but it still closed down 15% on the day after a negative earnings surprise. So let's end the webinar with our most recent innovation. We call it our stock discovery engine, and the big news at Chaikin Analytics is that in May, we won the Benziga FinTech Award for Best Ideas Platform at a big award ceremony in New York. 19 other competitors in that category. Mr. Wonderful Kevin O'Leary handed me the award, beaming because he loves the spotlight. But we at Chaikin Analytics were beaming as well because 28 people here in Philadelphia contribute to that product and that success mentality that we want our clients to win. So what is the stock discovery engine? It's based on the same principles that Spotify uses to find you music, Netflix uses to find you movies that you're going to like, and that Amazon uses to find you everything else in life. It's what's known as a relevance-based discovery engine. The primary point of relevance is the power gauge. So in a webinar that I did on May 25th, I seeded it with Advanced Auto Parts, one of our bearish auto parts retailers, and it immediately came back with 5 stocks that had similar characteristics to Advanced Auto Parts. They were large cap retailers at or near their lows with bearish estimate trends. Notice that O'Reilly was 240 on the way to 170. So there was still plenty of time to sell. Macy's and Target went down further, but the discovery engine goes one step further. It recommends potential swaps. So on May 25th, it was basically saying if you own Advanced Auto Parts, you could swap that into Best Buy, which is a retail stock with a bullish rating. And coincidentally, I noticed that Office Depot was trading above 6 today. So Office Depot went up 20% over the last 2 months. That was the first swap it recommended. But let's see how Best Buy did. We had just gotten an oversold buy signal on Best Buy. And on that webinar, we recommended a put trade, rather a vertical call spread. Best Buy reported better than expected earnings, and the stock spiked up from 51 all the way to 61. At which point you want to take your money off the table. And here's what the put spread did, which we recommended on 5/24 in our webinar. It was the June 2nd vertical put spread, buying the 50 put call rather, and selling the 57 call. And the full profit was realized in one day. A position that cost $247 was trading close to $700 the next day because of that big spike up in price. Now, is that going to happen every time? Of course not. But it happens often enough that these are trades you want to consider putting on, or just getting long the stock. So we got this testimonial, 257% in 24 hours. I don't think I would have ever attempted an earnings trade without the guidance in your webinars. This was a new Chaikin subscriber. So let's look at a more recent example of the discovery engine. A week and a half ago, I made Starbucks my bearish stock of the week. Starbucks reports earnings on Thursday. I believe it's after the close. So I seeded the discovery engine on July 23rd with Starbucks, and out came Chipotle as the first bearish match. It was $3.95. Let's look what happened to Chipotle. The power gauge had turned bearish. You had had a bearish personality change, lots of selling. The power gauge turned bearish here at 420 when it broke down below our long-term trend line. From that 395, which we featured in our market insights, you're down over 50 points because sadly the bacteria is back. Now look at the relative strength just prior to the personality change. This is what I was referring to when I said that relative strength stands alone as a bullish or bearish indicator, but if the fundamentals don't support it, you're on a high wire without a safety net. And here's an example of that. When something goes wrong, it's very painful to fall off that high wire. So be very careful and use stops if you're trading in momentum stocks. So now we've covered my ultimate checklist for stocks, all based on the information in Chaikin Analytics, which is a proven stock selection system. It's based on a 20-factor model, which combines fundamentals and technicals, and it includes our stock discovery engine for finding ideas on both the long and the short side. In addition, we have the screener and our options module, and all of this normally retails for $1,950 for an annual subscription. You can go to chaikinanalytics.com/check and subscribe, but we've got a special offer for you in just 30 seconds to end the webinar. Now, in addition to everything we've talked about, you get our intraday charts, our earnings alerts, and my weekly market insights. And as a Chaikin subscriber, you get small group tutorials to help you get set up and learn all the features of Chaikin. We run them 3 times a week. Joe Bicella and his customer success team have gotten wonderful feedback from new subscribers. We offer unlimited coaching and support. And if you need one-on-one coaching, we have that available as well. And in addition, you get my colleague John Schlitz's daily morning insights, which comes in your inbox before the opening. Now, here's what John Malden said about Chaikin. He said, "I'm impressed by what Mark has done. My analysts are enthusiastic users of Chaikin Analytics. Mark's system has been integrated into our routine due diligence. Ed D'Agostino paid testimony to that in the introduction. And it's part of our process for vetting and evaluating potential investments." So John's become a believer. I know Ed uses it in a very personal way, which he may care to share with you as we end the webinar. But this endorsement means an awful lot to me and to the whole Chaikin team. John Malden, obviously very respected around the world, has embraced our methodology. So here's our special offer. Normally $1,950 a year. As a webinar special exclusively for the Malden Economics readers, we're reducing the price by $300 down to $1,650. Go to chaikinanalytics.com/check or call the number on the screen or email sales@chaikinanalytics.com if you have any questions. This offer is good until Friday at midnight. So with that, I'd like to thank from the bottom of my heart Ed D'Agostino, who's lived through tech hell in the last 2 days as systems go up and down, and see if you have any closing comments, Ed.
Well, first, I just want to say thank you. I didn't realize you were going to do this special offer for Malden Economics readers, so I very much appreciate that. I always appreciate it when our partners can help take care of our loyal readers, so thank you for that. And I would just say if you are listening and you're going to take advantage of the offer, one strong suggestion would be invest an hour in one of the group tutorials. By investing 1 hour, in learning how to better use the system, you're going to be 10 times more proficient, and then you're really going to get the value out of the service. That's what happened to me. I didn't invest the time. I'm a busy guy. So for the first month, I didn't really get a lot of value out of it. Once Joe was kind enough to give me a quick tutorial, I was off to the races, and I haven't looked back since. So I would recommend that if you're an active trader, you give this a shot. It'll save you some time, and it will help you make better decisions. Thank you so much for your time. And Mark, again, thank you. Always appreciate your help and your partnership.
Ed, thank you. And I'm going to turn it back to Joe Bicella to wind up the webinar.
All right, everyone. Thank you so much for joining us. Could not have said it any better myself, Ed. Thank you all very much for that endorsement for our support webinars. And of course, this is all included as part of your subscription to Chaikin Analytics. So to reiterate, this would be a full year's worth of access to Chaikin Analytics for a reduced rate, $1,650 for a full year to Chaikin Analytics. Again, you can join us at chaikinanalytics.com/check. I know our support team is sticking around a little bit later tonight. You can reach them at 877-697-6783. Tomorrow is actually a really busy day here at Chaikin Analytics for our support webinars. We have an options strategy session, but I think what would be best for each of you is to join us for our onboard session, give you a nice, full, thorough tour of Chaikin Analytics, give you an idea for how you can import lists into the program and really understand our analysis. Really, again, as Ed just said, it really could not have phrased it any better myself. Take the time to really understand the program and know how to use this. It will absolutely pay dividends, literally and figuratively for some of you. But in any case, again, I want to thank you all very much for joining us. Keep an eye out for the recording tomorrow. But again, make your way to chaikinanalytics.com/check, or of course, reach us directly at 877-697-6783. Everybody have a wonderful evening. Thanks for joining us, and we'll see you on the onboard session tomorrow.
Thanks, everyone.
Thanks, Ed.